there is a possibility that you will be able to achieve trading outcomes similar to these if you can comprehend the idea that I am about to explain to you. The most essential point is that they are not the consequences of my trading performance. Those are the results that I have received from my students who are currently enrolled in my academy. In this lesson, we are going to discuss what demand and supply are, how to determine and draw your demand and supply levels, how to establish your stop loss and take gains, and finally, I will demonstrate my trading method, which is something that I have shared with my students. The only thing I ask of you is that you pay close attention throughout the entirety of this film. This is a really special video, so please pay attention to it. That being said, without further ado, let's just dig right into it, shall we? In what ways do supply and demand interact? Demand is an area of aggressive buying, which means that at current levels, we have market participants who are strong purchasers. Is that correct? On the other hand, supply is nothing more than a field in which aggressive selling is focused. Now, let me get this straight. We are retail dealers, right? In addition to that, there are significant market movers, which include institutional traders, prop funds, large banks, and other major participants. In contrast to the large traders who are coming in with a significant amount of money, you are coming in with only $100 or $500. They have a greater number of resources and a greater quantity of information, and they are aware of this fact. Therefore, all that is required of you is to view these stages and proceed accordingly. Purchases are what you should be looking for in terms of demand levels. The only thing you need to do is wait for the price to retest that level, and then you will be ready to proceed with your purchases. Now, in this presentation, you can see that it is a favorable indicator if the price is in a push phase and comes back to this level with aggressive buying. This is something that you can see from the presentation. Buying aggressively is the most important point to make. It is clear that there is a significant amount of volume in the market, and I will demonstrate this to you in a moment. Next, we have supply in this area as well. The price is currently in a strong push phase to the downward, and this is our supply zone. As you can see, the price is currently down. How come? Given that we observe a great deal of aggressive selling, it is not clear how you draw these levels. To begin, the only thing you need to keep an eye out for is whether or not you discover aggressive buying or selling actions. A minimum of 3 or more large candlesticks are something you should keep an eye out for. For example, if you are looking for buyers, you should look for 3 large bullish candlestick signs. In my situation, we have blue candlesticks acting as purchasers. At this particular location, as you can see, there was a great deal of buying pressure. Now, take a look at this candlestick. Previously, we had a string of about 1, 2, or 3 large bullish candlesticks, which indicates that there were a lot of buying orders taking place. At this point, we are in a demand area. If we extend this zone to this point, you will notice that the price has returned. Pretty fascinating, don't you think? Furthermore, we can also see that on the other side, we had aggressive selling, which means that sellers were in charge, and a large number of selling orders were flowing in. It is important to note that I did not highlight the fact that demand and supply are more concerned with orders than they are with observing how the price reacts. Where there is an increase in the number of buyers or sellers, we are looking at orders. When you finally comprehend the role that these major players perform, you will be in a better position. I'm going to show you something right now. The following chart displays a succession of bearish candlesticks, which indicates strong selling. Even though I am doing this on the M15, you are still able to perform it on a longer time scale. In this location, we observed a great deal of pressure. You can mark your supply and demand zones in the following manner. You should keep an eye out for the final candlestick before the major shift. In this particular instance, we had a bearish candlestick, and then a more decisive move came after it. Make a mark on the inside of the candlestick's body, and then extend out that area. On TradingView or MT5, you have the option of using a rectangle. In addition to being a line, it is more of a zone. Our supply zone has been marked at this point. The only thing you need to keep an eye out for is the price of returning to this region for another experiment. After that, we will search for opportunities to sell. Let's sit back and watch how the price develops. As can be seen, the price has returned to the supply zone that we were offering. In light of the current circumstances, I would not advise taking the sell position right away. You must wait for confirmation, because there is a possibility that the level could be broken. First, let's wait and observe how the pricing responds. Perfect. We can now observe the price moving in the opposite direction. We should enter a sell position at this time because this is a good confirmation. Your stop loss shouldn't be set inside the zone. Rather, it should be positioned outside of it. This is because there are instances when the price goes back up, which causes early sellers to get swept away, and then it advances in your direction. The next demand zone should be where you set your take profit. You could strive for a risk to reward ratio of 1 to 2. Let's wait and see what follows. Even though we were unable to proceed, the price continued to advance in the desired direction. Not every transaction will result in a profit. The stop loss that I had placed was just a hair above the zone, and it was still hit. This is an opportunity for education. Given that you are attempting to reduce risk, it is not a good idea to set a really large stop loss. Another trade with our supply zones is something we should check out. At the moment, we are utilizing CJPY and M15. Several large bearish candlesticks give the impression that there is intense selling going on. I will be marking the supply zone once more. When the price returns to this region, we will then proceed with the sale of the property. At this point, the price returned to the zone that we were in. Now is the time to enter the market. It is important to keep in mind that you should position your take profit at the next demand area and set your stop loss a little bit outside of the zone. There is about a risk to reward ratio of 1.5. Let's sit back and watch how the price develops. There is a big reduction in price, which results in a decrease in our take profit. At this point, this is a lot more thorough, and I would like to get more into the topic of supply and demand with my pupils. As a trader, you will improve your skills to a greater extent the more you practice. Identifying supply and demand zones on your charts can be a useful trading strategy for market participants. These zones, which are similar to support and resistance levels, identify locations on the chart where the price is expected to bounce or reverse. Both of these scenarios are possible. These zones allow traders to zero down on specific locations where they might be able to buy or sell. To put it another way, supply and demand zones serve as a first filter, offering assistance in determining price levels that have the potential to generate profits. Enjoyed the content? Make sure to like, subscribe, and leave a comment below. Your support helps us bring more of what you love.